Hey, good morning. This is Mayor Valensky with Driving Markets. Driving while talking about markets. Anything said in this piece is an opinion only. It's there for education purposes. Let's kick off. So yesterday, the markets were down. Let's go over the numbers and where they're at before we go into detail what was driving markets yesterday and what will be driving markets today. So the Dow was down 697 points at 33,129, slightly up overnight by 38 points. Nasdaq was down 294 points, down at 11,492. Check my numbers there. 11,492, and the S&P was down 81 points at 3,997. 10-year US Treasury yield. The yield is for Dove. The yield was running at 3.95%. Now, I've been saying on Driving Markets that the yield on the 10-year Treasury is going to go up. Remember, it came all the way down to around about 3.35 in January. And that moment, I was saying on Driving Markets, on publication, I was saying the 10-year yield is going to go up to 4.6%. We're at 3.95. So let's have a drill down a little bit more. Before I forget, Bitcoin fell also yesterday, came off the high 25,000. We'll go into that in detail. But let's have a look at what was driving markets. Driving markets yesterday was purely based on fear, interest rates, fear, inflation. Where is the economy going? And the Fed will have to raise rates even further. JP Morgan top analyst came out and said that equity markets in the States will fall around about 27%. Now, I've been saying that for a while. I've been saying equity markets will fall at least 25-30% in 2023. Why would they fall 25-30%? Because we're going to go into recession. And we're going to have rising interest rates and rising inflation. Excuse me, I've just got to have a drink. My throat's a bit croaky. So we're going to have a recession in 2023 worse than 2008. Now, one of my viewers, Jimmy, always sends me these little clippings of what I said previously, and a lot of what I said didn't go. For example, yesterday he sent me a clipping on Bitcoin that I said it's going to go down to 19,000. He circled it, sent it to me, and goes, one day you may get it right. It's true, 100%. One day I may get it right. Most of the time, wrong. But one day I could get it right. In this particular case, my opinion, I think we're going into a recession in 2023, much greater recession than 2008 and much greater than the dot-com crisis of 2000. Most traders these days, the mass volume of traders who are age range 25 to 30, or even 35, but 25 to 30, have not seen a bear market, they haven't seen a recession, they haven't seen a fast market, they haven't seen anything where the platform closes the prices or widens the spread, or you can't trade because the market is too fast. When that market hits, all those traders who have only bought long over the last 10-15 years and have only benefited from going long, never been in a bear market, don't know what it is to go short, only go long, they are going to suffer significant losses, because what they do is they guess where the bottom of the market is, and they can't believe that the market's fallen 10% or 15%, it's going to fall any more, and what they do is they keep on buying and they then enhance the losses. So if we go into a bear market this year, which I believe we will do, it'll be worse than the 2008 banking crisis, then you're going to see at least 25-30% of equity prices, and high risk assets like the Nasdaq and like cryptocurrencies like Bitcoin are going to be absolutely trashed. So let's dig a little bit deeper as to what caused the Dow to fall yesterday. So retail sales earnings came in poor, and the forecast for Walmart and Home Depot in the States came in poor forecasts, and they were tanked. Okay, they were dumped. In addition to that, because of the fear of interest rates and because of the fear of inflation, the high-tech sector, which is susceptible to interest rates, they also went down. The Apple, the CRMs, the Salesforce, the Metas, Tesla have been calling down from $208 a share all the way down to $140, and I do believe it's going to go down to $140. I want to state this for the record. Jimmy, if you're listening, you can put down Mayor Valensky says Tesla's going to be $140 within the next 30 to 60 days. Okay, very overpriced, very overvalued. Same with Meta. Expect Meta at $171 a share, far too high, needs to come down to around about the 130 level. and then down further, but let's call it 130 in the near term. So the Nasdaq, high risk assets that need money, are vulnerable to interest rates. They are going to suffer the first in any downturn in the market. So you can expect the Nasdaq to fall even further, and those high tech stocks to fall even further. Talking about cryptos, which are super high risk, and the only binary, it's only is it going up, is it going down, no fundamentals, no economics to it. Then expect cryptos also to be trashed when you go into a bear market or when interest rates rise. So you can expect Bitcoin not to be at 24, 23, 22, expect it to be at 10, 11 or 12 or even lower. Okay, Jimmy, if you want to highlight that, then you can definitely highlight that and send it back to me again. And if I'm wrong, just say, yeah, you got it wrong again. Absolutely fine. This channel is to prove me wrong. I'm more than happy with that. Got no problem. If I am wrong, held in my hands, get on with it. Big deal, I got it wrong. That's the way it goes. Okay, so moving on to foreign exchange. Or foreign exchange, also FX traders, you've got, interesting with the dollar, it was a bit weaker against the pound, and against the euro, stronger against the yen. I'm calling the dollar yen up to 140, up to 145. It is slowly creeping up there, and if rates go up in the States, you'll definitely see the dollar yen at 145. As far as the pound's concerned, the pound is going to benefit from any type of PMI report, any type of positive GDP. There is, in my feeling, his gut feeling, the pound wants to get to 125, 127, but just seems to be struggling because of this interest rate environment. As far as the euro is concerned, I expect the euro to be down to 95 by June. 95 to the dollar. There's euro dollar down to 95 to the dollar. Swiss franc dollar, I expect the Swiss franc to be slightly stronger as a safe haven against the dollar. Okay, New Zealand increased interest rates by 50 basis points this morning, the highest it's been in 14 years. Interestingly enough, Israel also increased on Monday its interest rates by 50 basis points. Why do I mention that? Because they are a heavy-duty high-tech sector, and most of the companies in Israel, a lot of the companies in Israel are quoted on the Nasdaq, and a lot of them are desperate for cash and need the startups, and they need money. And as interest rates rise, those startups are going to be affected. Remember, Israeli technology is within all of the WhatsApps and the Zooms and the other type of technology, the Waze, etc., etc. So a lot of technology is in there. So those companies are going to be highly impacted and highly affected. As regards the US 10-year Treasury, I'm calling it at 4.5, 4.6 by June this year. I think we're going to have a cataclysmic collapse in equity markets. Okay, something to keep an eye on. I think rates will go up in March meeting with the Fed by 25 basis points at least. I'm calling probably for 50 basis point rise. It's just that inflation looks like it's going to start creeping up. This is Mayor Valensky with Driving Markets. I want you to like, share, you can comment, you can subscribe, and just let's build the channel. Okay, let's get the views up. Have a good day.